Tuesday here at the New York Stock Exchange, and we're seeing the Dow Jones Industrial Average fast approach that 20,000 level. Joining me today is Tim Anderson of TJM Investments. Tim, great to have you on today.
It's nice to talk to you.
Well, this week is a week in which we will see muted trading as investors as well as traders head off for the holiday weekend. But we have plenty to talk about. This is the first time I've spoken with you since the Fed meeting, and we have that psychological level for the Dow Industrials. So how are you factoring the latest Fed comments?
Well, I think clearly the rate hike was very much expected and a foregone conclusion by the Fed funds futures and pretty much the stock market also. Their comment that they were anticipating 3 hikes in 2017 rather than 2 gave the market some indigestion maybe for a couple of days. Was almost a little bit surprised by that, and I think one of the reasons it's so easy for the market to get over that and work through it is that if we were to go back a year ago after their rate hike in December, the expectations were that we would be looking at 3 to 4 hikes in this past year, and clearly we only got 1. So sometimes their projections as to how many hikes and at what pace we might be getting in them in the future are quite a bit off from what really happens.
And Tim, I do want to take a step back and look at what's happening in terms of the geopolitical events around the globe. Now, we only have a handful of trading sessions left in the US, and we haven't seen much reaction in terms of the overseas events in Europe. We are yet to ascertain whether or not they were all terrorist related. But in terms of risk aversion and thin trading conditions, what do you expect to see?
Well, if these events were to escalate into more of a pattern, you would certainly expect that to have a negative impact, cast a little pall over the market rally. Now, we're not seeing that yet, clearly, with the move today for a couple of different reasons. And we really didn't see too much of that from the isolated terrorist events that took place in the U.S., either in Orlando or in San Bernardino or in other parts of the country over the last year. It's about 1 year, almost exactly, from San Bernardino. So really, the market seems to be a lot more concerned with the economic forecast going forward and the pace at which the new Trump administration will be able to roll out their economic plan.
Well, Tim, I think cross currents was the key word you mentioned, and indeed we will have plenty of cross current heading into the new year. So thank you so much for joining me, and have a happy holiday.
Same to you.
Thank you.